Hey guys, good evening. Pratheesh here. So we'll look at the trade plan for the index for the next session. Quickly into the Nifty futures and Bank Nifty futures chart. So this is the daily 30-minute volume profile charts for Nifty futures continuous contract. So what I have discussed in the previous video is on the weekly analysis part. We have discussed that on Friday, that is after the expiry day, the new series started on Friday, that is on 19th April. We got a clean trending day, or what we call as a multi-distribution day on the upside. Okay, it was a kind of a triple distribution trend day. So you have three distributions separated by single prints, which closed almost near the day high. Whereas another advantage was that we got a VPOX skew near the value area high. So all these are advantage for bulls. At the same time, we got a buying tail here. We got a buying tail, and that buying tail was very close to the March month low. Okay, we came very close to March month low, and then there was some kind of buying coming into the market, and we started making a tail over there and ended as a triple distribution structure with the VPOX skew. With all these in mind, what our observation was that, okay, bulls are having edge at the close of the Friday session. Okay. So what we can expect is a gap up opening or open drive is expected for the next session. Since they have the VPOC skew and triple distribution trend day closing at highs. So the expectation was a gap up or a drive. Okay, that is a expectation at 99.9% of the time. Expectations go wrong. Okay, so take it very lightly. Okay, so expectation means what we wish to happen in the markets based on certain data points. Like that, you got a good tail from the March low, multi-distribution profile, closing at the highs, VPOX skew. All these adds more points for the bulls, so that they are expected to deliver next session a gap up or a drive. That was the observation. So what happened today was we got a clean gap up opening. The market opened over here. Then during the opening, there was some kind of profit booking into the markets. Markets slowly started coming down, but it is unable to close the gap. There was a small gap, still it is there. You can see there was a small gap was there. So it came very close to the previous day's high or previous day's value area high. Okay, then from there again it started going higher. And finally, the day ended as a large spike. Okay, open gap up. Then when there was some kind of profit booking, I expected, okay, the market is likely to close the gap, and then we need to decide whether they are able to hold this value area high or POC, this particular band. And if they are not able to hold this value area high or POC, then our immediate support will be somewhere around this particular band that you have already mentioned. Okay, then they could expect a dip from there again. Buying could proceed. That was the bias actually, but that didn't materialize. Market held on to that gap. Okay, most of the gap has been closed, but still a few points are there. And from there, market again started one time framing higher. Then there was a midday intraday. There was a small dip. And that dip also is being brought and bought, and market started going higher. And the end of the session, we closed as a spike, larger spike. So here the spike is from say like 100 points. Okay, 300 or 310, somewhere around. It started and it ended around 399 or somewhere 97. So almost 90 to 97 points spike is there. So most probably, whenever you see a very large spike, okay, say like 100 points, 120 points, something like that, it's not a good sign. Okay, so most probably next session either will open flat or will go sideways, at least for the initial balance to form. Then we'll decide, because the spike zone is considered to be the largest one, because 100 point spike is considered to be a larger spike. Okay, so spike has come. Now we have spike rules in focus. So what do you mean by spike rules? So if you are very new to market profile, you would not known about the spike rules. So we have a set of rules called as spike rules. The spike rules are nothing but okay. First of all, before dealing into the spike rules, we should understand what is spike. First of all, okay, spike is nothing but a larger what is it? Large move from the well-established balance during the last 60 to 45 minutes of price action. Okay, so what happened now? Morning we have been opening gap up, then we came down slowly to close almost 90% of the gap, and then we started going higher, and it was forming a clean balance over here. Then all of a sudden it was well established balance over here in terms of volume, in terms of price action, everything. It was a clean established balance. And all of a sudden by around 2:30 or 3 o'clock, that is the last 1 hour of trading session, 45 to 1 hour of trading session, we experienced a larger move from the balance. Okay, so that is what we call as a spike. Okay, a larger move happens towards the closing of the market from a well-established balance is what we call as a spike. This can happen on the upside and this can happen on the downside also. So whichever side it happens, we call it as an upside spike, and downside, if it happens, we call that as a downside spike. So a spike is considered as two category. One is that the spike can be created by retail traders, that is emotional traders, okay, traders who take certain decisions based on emotions, or else it's done by smart traders who cleverly planned that particular move. Okay, both way it can be, and we cannot decode at this point of time during the day of the spike. Okay, we cannot decode that whether it is being created by smart traders or retail traders. Okay, so that is the actual truth. Okay, nobody can say this spike is created by retail traders or smart money. On the day of the spike, it has occurred. But for the next session, we can decode that. How to decode in the sense, if the spike is created by smart traders who already knew something in advance which we doesn't know, okay, then the spike should get a follow through higher because the spike happened on the upside. So if the smart money knew something and they would have created the spike, in the sense, the spike should get a follow through higher in the next session. Follow through higher in the sense, either we should open above the spike high. This is a spike high is around 393. We should get a gap up opening or a drive and stay above the spike high and build value above the spike high. It's an ultra bullish scenario. Okay, that is one particular scenario. The second scenario is that we open flat. Normally, when you get a larger spike of 100 points, the very first possibility is that you open flat and start building value into the spike, because already you had a well-established balance over here, and from there market makes a larger move in the last hour of the trading. Okay, so the value will not be there in the spike. Okay, spike is a larger move in the price from the well-established balance. So in the spike, you cannot expect any value formations happening in the spike zone. So we cannot find out whether that is created by smart traders or retail traders. That is the issue here by the end of the day. So next session, if you get a higher opening above the spike, then it's a clear indication that smart traders have purposefully entered the market and they have moved that market in such a way that it showed as a spike in the chart for us. Okay, and if you get a follow through, you could clearly see that it is going to be ultra bullish scenario there. And in case of today's move, it's a larger spike, so I expect market to open flat inside the spike and start building value. That means the spike which happened previous session doesn't have any value. Now the spike is getting value. That means it is again a kind of a neutral to bullish scenario. Okay, this is the second scenario with respect to spike. And the worst case scenario is that market completely ignore this spike. That is, this 100-point zone is there, 300 to 310. 300 to 397 zone. This is your spike zone. Say like market completely ignores this spike and we open below this spike zone. Whatever reason may be, right? These are all the possible scenarios. I'm not saying that market will open below the spike base or above the spike base. These are the 3 possible scenarios. Right at the open, you can decide which bias you should take for the next session. Okay. So say like market can open above the spike high. It's a ultra bullish scenario, ultra bullish. Market can open inside the spike range, spike base to spike high, somewhere around it should open inside this zone. Then it is kind of a neutral to a bullish scenario. Okay, market completely ignoring the spike, and we open below the spike due to whatever reason may be. Okay, reasons are not important. Okay, we don't want to find out the reason. We need to make money out of the market. Okay, reasons we will know it by the end of the day. Something might have happened. Okay, due to whatever reasons, market opens below the spike base, then it is a bearish scenario because these spikes are not created by smart money. That is the first indication that you are getting it via the opening price. So if the open price is below the spike base, it is a clear indication that markets the previous session spike was not created by the presence of smart money, and it was some kind of emotional move happened during the last session of the trading activity. Okay, so now if you open below the spike base, then easily this entire balance will be taken off, and we are likely to go and close this gap. Then whatever supports you have already mentioned in the previous session, that will hold true. Okay, that is the case when market opens below the spike base. Okay, and possibility. Now we'll analyze how much probability is there for each of these 3 scenarios. First scenario, possibility is very less. Say like I give 40% criteria for the first scenario to happen. And the third scenario, that is the market ignoring the spike and opening below the spike right at this point of time, I give say like 20% chance is there. Okay, and remaining 40% chance is there for the market to open flat. So I give more weightage for the value to build in the spike, or we get a higher opening. The 20% chance is there for the market to open below the spike base. Okay, this is my observation, my pure observation. Okay, it may be right or it may not be right. That doesn't matter. Okay, you need to take certain decisions based on the data points available with you at this point of time. So at this point of time, I have a database of a larger spike. So my immediate bias is that we'll get into this particular zone, build value, then we'll go higher. That is the first case. And second priority is given to gap up opening or drive above the previous high. And the last worst case scenario is market opens below spike base. Okay. So today I am giving less priority to 20%. And if suppose market opens below spike base tomorrow, okay, somebody will come and question me that you said that market may open in the spike base, but market opened below the spike base. So how do you prove your theory? Okay. So here the point is that we don't want to prove anything to anybody. Okay, our sole objective of taking these probable scenarios is to manage your risk well and make money from the markets. Okay, your view can be right or wrong, doesn't matter. But if you're wrong, you are immediately cutting your positions and changing sides. Okay, if you are able to do that, then it's good that you stick on to trading. And if you are not able to adapt to the quick price changes or scenario changes in the market, and you are adamant that, okay, my analysis is saying that market will open inside the spike base, but the market opened below the spike base, but you are adamant to change your bias and you stick on to the previous bias. Okay, this does not give you money. Okay, be very clear in that. My view may be 100% wrong sometimes. Okay, that obviously happens. Nobody is there. Nobody is cannot predict markets every time at 100% accuracy. So I give a chance for that. I say that my analysis can go 100% wrong at any point of time. But the point is that, okay, I need to be vigilant. So that is the case. We are having 3 scenarios in place. Okay. So that is how we give probable scenarios. Otherwise, I can immediately say that, okay, market give a spike. So next day it is bullish. It will go and test this. Then it will come here. Nobody can say like that. Okay? Please understand that. So if you get a value in the spike zone, then the immediate target will be your 520, somewhere around this particular POC value very high. So likely to be 480 to 520 will be your immediate target. Say like we build value in the spike, or we trade above this 400 levels, 398 or 400 levels. Then obviously your ultimate target will be somewhere around 470 to 480 to 520. Okay, then 520 to 590, somewhere around, you got a gap zone. So you may face resistance somewhere around this particular band, 480 to 520. Then once this initial hurdle of 480 to 520 is being crossed, then we need to accept inside this gap. Okay, the gap is a kind of an invisible tail. So once the price consolidation happens in the gap zone, then we can expect the further targets to be somewhere around 600, then towards your 700. Okay, maybe this particular area, the single print is there, 670, 680, then further 700, 720 levels you can expect. Okay, before going all these things, we need to cross this particular band of 480 to 520. Okay, this is the initial resistance for me for tomorrow's session, 480 to 520, and the support is your spike base. Okay, if 22 310, or roughly you can say 280 to 310, this will be your support zone. Instead of saying it is a single price value, I mark it as a zone. Okay, today's POC with respect to your spike base, that is coming somewhere around 22 280 to roughly 22 310. So that will be my support, and my resistance will be 480 to 520. So this is the zone I have marked for the market to play for the next session. Below this, I will be bearish. Okay, and above this, my targets are towards these levels. Clear? So previously, we have mentioned in the weekly analysis that anything targeting towards what is that? Monthly chart, if you see 22,400, I told you that anything comes very close to 22,400, we could see a rejection. If 22,400, 420, that level is being crossed, then probably we are not going to go down. So this is your monthly chart. I'm showing it again for your reference. What you have seen is that this is your distribution 1 that happened on the April monthly, and there was a extension down, and now we are getting into the second distribution. Okay, so this level is very important. This particular zone, actually, I'm marking here. This comes somewhere around this 22. Yeah, this low is there, no? This low somewhere around 22,420, and this low 450. So this 420 450 zone is important. Anything above that, in the sense, we are not bearish anymore. Okay, right now that situation has not come. We are very close to that levels. We'll wait and see what happens tomorrow. Tomorrow, if you get a follow through on the spike, then probably we'll get into this 420 450. Then probably our bearish bias of having a bearish bias in the monthly time frame is now getting invalidated. We'll see that tomorrow. Tomorrow, if that happens, then we have to throw out all our bearish bias and positional for a bullish bias. Okay, so we don't know how markets are going to react tomorrow. So based on tomorrow's reaction, we'll decide whether we want to throw that bearish bias or we can hold on to that. At this point, we are clueless. At this point, we are very close to that level, but not able to take any decision at this point of time. Clear? So that is with respect to Nifty. Now let us go to Bank Nifty. Bank Nifty, what happened today was very good. Auction happened today. See, we had a strong tail in the previous session, as we have got that in Nifty also. So previous session we had a strong tail, that is coming very close to this March VPOC. They dipped below this VPOC, but could not get a close on a 30-minute time frame below the VPOC, and there was a sharp rejection. Then slowly we got into a kind of a short covering. Okay. Then extension. We got a single prints over here, a double distribution profile, closing at highs. But the POC did not shift on the higher side. So today what happened? Again, there was a gap up opening, and you took out the multi-day high, the previous day high followed by the next day high. So it took out the multi-day high. Multi-day breakouts are mostly fake outs actually. So it took out the multi-day high and then unable to stay above this multi-day high, then they slowly dropped down to close the gap. Okay, whereas in Bank Nifty, the gap was there still, but in Bank Nifty, we closed the gap. And there was an attempt for the price to push inside the previous day's range. Okay, after this initial balance, there was a range extension happening on the downside to push the price back inside the initial, back inside the previous day's range. Okay, we came inside the previous day's range, but immediately within the same period, within the same 30-minute bar, we got a rejection. Rejection means price that tried to enter into the previous day's range, but unable to sustain there for a period of 30 minutes, and immediately we got a close back inside the IB. Now, what is this called? This is called as a probable failed auction. Now, I have marked failed auction here because it went out, it went and took out the other side of the IB. That is why I have marked this as a confirmed failed auction by end of the day. At that point of time, I have marked this as a probable FA because probable FA you can analyze by 2-3 scenarios. One scenario is that you get an extension below the IB, okay, but price is not able to close below the IB. It is getting a close back inside the IB. This is considered to be a probable FA. And how good this probable FA can be. Okay, it depends upon the closing of the particular 30 minutes candle. Say like the candle should close on the higher side, at least more than 50% of the candle height. Okay, that is one important criteria. That means it should have a strong tail. That's all. Okay, it should have a strong tail. Either it could be a bullish engulfing candle, like a kind of a bullish engulfing candle, whereas your shadows or the candle shadows are very small and you get a bigger body, something like that. Or else you get a pin bar kind of candles. Okay, there will be sharp tail and closing it normally could be at the upper quadrant of the candle. So those kind of candles we can call that as a good probable FAs. Okay, that is first indication. And second indication is that a good probable FA gets confirmed by a C period candle. Most probably here it is getting confirmed by a C period candle. Then immediately, or even not immediately, next bar. Okay, if not in D period or E period, at least E period should get a follow through higher. That means you should go higher in the sense you should get an immediate follow through by breaking the previous candle high. So here C period we got a follow probable FA. The next bar itself we got a follow through higher. So we took out the previous day high, previous bar high, and we got a time framing higher. So follow through was happening immediately. So candle closing was good. Okay, price went below the IB, back inside the IB. The candle closing was good. That was a first point to consider as a probable FA was doing good. And second thing is that you got an immediate follow through in the next candle itself. So that is another advantage. So this is the time you can pull the trigger to target the other side of the IB. Okay. Now, if you are getting a pullback somewhere around here, next candle itself, you can take an entry, putting a stop loss below this bar, targeting the other side of the IB. Okay. And these pullbacks are most advantage for you to load onto your quantities. Okay. Having a stop loss below the C period low. And finally, what happened? The market went and closed opposite side of the IB. So failed auction is getting confirmed by end of the day. So Bank Nifty is now officially a neutral extreme up day. What is neutral day? Both sides of the IBs are being taken out. Here IB low is being taken out on the downside first. Then market went and took out the IB high on the other side. So it becomes a neutral day and the closing was on the higher side. So it becomes a neutral extreme up day. It's a completely bullish scenario as of now for Bank Nifty. So with this context, Bank Nifty officially could get a gap up opening or a drive targeting the supply zone somewhere around 48, 265 to 450. So this is considered to be the supply zone for Bank Nifty. So we can expect the price to get rejected for the first time when it pressed 265 to 450 levels. So whether it is getting acceptance or rejection, based on that, if it is getting accepted, then the next possibility is that they will go and close the gap. Okay, go and close the gap. Followed by you had a 3-day balance at the top. You can see here. These 3 days are completely sideways or inside days. Actually, you got a big day on this particular 9th April, followed by 2 inside days within this 9th April profile. So officially now it is a 3-day balance over here. So this is your 3-day balance. Extreme is somewhere around close to 48,626. Okay, 48,626 to this gap somewhere around 48,656. This will be the next zone of resistance. So once that zone is being destroyed, then it is easily to target the other side of the 3-day balance extreme. Okay, so this is with respect to Bank Nifty. We got a strong tail. We have been expecting weaknesses only below this on acceptance. A big weakness in market, Bank Nifty should happen only if we get an acceptance inside the tail. Okay, acceptance here, it could call for more weakness. But before getting acceptance into this tail, we had this double distribution singles to act as a support. Even if price drops, then this area will considered as an important support, and buying could come from these levels. If this level also being taken out only, then we are looking to find support at this tail zone. So nothing happened. Such kind of activity doesn't happen, and market gave a failed auction, and then it started to close as a neutral extreme update. Okay, so on the opposite side, worst case, what can happen is, say, like on the downside, say like on the downside, 47,900, the value area high is your immediate reference. So price unable to stay higher above this value area high 47,900 for the next session, you could drop it down immediately. Okay, rotations should happen within this particular range and may get a failed auction also may get cleared. We don't know at this point of time, but that could happen if we could not get a gap or a drive and we go and trade below 47,900 for some time. Okay, so if we trade below 47,900, then possibly we could come and test this tail zone once again. So this is the tail which pushed the price to make a neutral extreme update. So you should get a follow through next session. But if that is not happening, then that means there is no demand in the market. So market will come down to look for demand. So officially, what happens now, if there is no demand on the higher side, then market slowly comes below 45, 49, 47,900, and this is a completely balanced profile. No? So they will come and look for demand in the tail zone, because this is the area which pushed the price to make it as a neutral extreme day. So that buyer will be tested one more time. Is this really strong or not? If he is really strong, then he will come and put defense. Okay, he will defend the price action, and then they will push it higher. And if this tail is getting accepted, then the immediate next support is somewhere around here. Okay, they can make a quick drop towards this double distribution singles. So all these possibilities are only below 47,900, or the worst case is this particular tail is getting accepted. This tail is important. Okay, if this tail is getting accepted, or simply consider this below the failed auction. So below failed auction, this will be your next support. And at this point of time, I mark previous day high as my resistance. So anything above previous day high probably could target 265, 450 levels. So that is my bias. And if it opens inside the range, then probably will rotate within previous day's high and this particular tail. Whichever side is getting momentum later in the session, we'll decide accordingly. But this will be my final support. Okay, this is my support, and this is my resistance. So these are these zones which I'm trying to play for the next session. Maybe I'll be selling puts below this, I'll be selling calls above this. Depends upon, okay, which side you're getting momentum. Go and settle it in the opposite side. So my area of operation is below 4700 and above 48 200, or roughly put as 48 300. So that will be my range of operation. So I have marked this larger zone as this is a supply zone, and this is a demand zone at this point of time. So whichever side is being taken out, then we'll slightly raise the demand zone, and we'll look for the next possible resistance to take a bias. Clear? So this is with respect to Bank Nifty. So let us see what happens in the next session, whether they are able to hold this 47,900 and push higher, or they give up 47,900 to test the tail, and from there buyers are coming and they end up as a sideways day. Okay, if they end up as a sideways day, then we'll get a 2-day balance, and expiry day is going to be an imbalance move. That is also possible. Okay, these are the scenarios. Okay, nothing is confirmed, nothing is guaranteed in the market. Only thing is that you have to manage your risk and go with it. That's only way. Okay, so recently you have seen a lot of spikes in options premiums happens. Okay, all these will happen. Okay, there is no way or no easy money in the markets. The only thing is that you need to trade it via spreads, so that all these effects can be neutralized and you go with your trade plan. That's all, very simple. Okay, so with that, I'm completing the session for the today. We'll see in another video tomorrow. Until then, take care. Have a nice day. Bye.